Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is July 18th, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. All right, so what happened today was we were up a whole $1.01. We did predict this in yesterday's video. I did mention that we didn't reach these mathematically calculated levels, and it did look like we did have some upside potential. I did also mention that it does look like that we may be turning over shortly, simply because we had higher volume. It wasn't spectacular volume, but it was definitely higher than the previous 2 days. Obviously, today, as we can see, we had even lighter volume, with a whopping 113 million traded today, which is very sad. So basically, like I've been mentioning in previous videos, when you have low volume, the institutions, it gives them the chance to prop the markets higher, and especially this week is options expiration, and in addition to that, most people are bearish the market, so obviously institutions are going to prop the markets higher to stop out anybody who is currently short. Alright, so I did mention in the previous video that we probably would get some upside. However, we just have to be careful because downside looks like it should be coming shortly. Okay, so this is the daily chart of the SPY, and as you can see, it just broke through this 137.06 and the 137.26, and then it came close to tagging the 137.74, which actually today was actually at 137.64. So it's just about 10 cents off this mathematically calculated up level up here. Okay, so that's pretty close. But did it really just pierce through these two levels like butter? Not really. Okay, I mean, these two levels still held water. And as we've been seeing, these mathematically calculated levels have been working out fairly well. And let me just give you a quick view of what I'm talking about. Obviously, nothing is 100%, and these levels have failed before, but they've been pretty working out pretty well lately. I mean, its success rate has been pretty spectacular. The only difference between these levels is whether it's going to be a swing trade potential or a day trade potential. In any case, what we have here is the beginning of the day, and this is the ending of the day, and then this is obviously the 10-minute chart. What we did was the SPY went right into this 137.06 level, and then it pulled back. So it was at the high of 137.12, and it pulled back to the low of 136.75, which definitely was enough, more than enough for a day trade. Okay. Then what did we do? And like I said, once a level is used and abused, basically if it's been hit once, we don't want to count on a second one. Sure enough, we break through this 137.06, and then what do? We tag this 137.26. This is the 10-minute chart now. Then what do? We actually pull back once again. Okay, so after that, we go right back into this 137.26 level again, and again we already had these two hits over here with these two candles, just like we had these two hits over here with these two candles. So the expectation is that there's a possibility that it will continue higher. It did. It came close, pretty close, 10 cents within the mark of 137.74 before coming back down and pulling back, ending the day with on a positive note of $1.01 higher. Now, not talking about the levels, what happened today? Well, we went up, we bullishly consolidated, we went up again, and then we created this somewhat of a down candle, and then we created this bearish consolidation pattern here, which is just two candles. Okay, so normally what you would see is a reversal take place at least into the 20 moving average. But like I've been mentioning in previous videos, when you have a pattern that fails, normally the opposite is going to be pretty drastic, in which case that's what happened. We popped up on a third candle, and then we started bullishly consolidating again, and then we created another somewhat of a bullish consolidation. It was kind of a long one, and then we started breaking down with a down candle here, and then we created this bearish consolidation, and then we come down, and then now it looks like we're changing, and then there's a possibility that we go higher again tomorrow. So that's the intraday though. So don't I mean, I don't like looking at the intraday, because obviously the higher level, the longer the time frame is, the more accurate it's going to be. So if the weekly is not confirming the daily, then I would rather trust the weekly than the daily, and same like the hourly and the 10-minute, and so on and so forth. Alright, so switching back to the daily, as we can see, these three mathematically calculated levels did hold up. I wouldn't say maybe the 137.74. That if you had taken weighted to trade this level here, it probably wouldn't have made it there. But that's normally the rule I do. If it doesn't hit the level, then I don't take the trade. But it did hit these two levels, in which case 2-day trades were solid trades, and we have these two calculated levels down here that gave pretty good support for these days over here. The next calculated level I have, however, however, is already up all the way up here. Is just 141.36. I did mention in the previous videos that I highly doubted that we would get into this area here, and if anything, we would get into this area here, which is about the 138 level. Believe it or not, I did have a 138 level here in the previous videos. I took it off this video simply because, or the previous video simply because I didn't think it would even get to the 138 level. But, there is a possibility. I mean, simply because now it does look a little bit stronger. This is still options next week. It is only Wednesday. We still have Thursday, Friday. So it really depends on what happens tomorrow. Could we pull back tomorrow? Yes, we could definitely pull back tomorrow. But, because it's so close to this upper trend line over here, there's no telling what the institutions are going to do to prop the markets higher. So this is what I'll say. If we have low volume again tomorrow, then yeah, there's a possibility that we can reach this 138 level upper trend line here. And if we start increasing the volume, then this 137.74 level over here should hold, and the market should start turning over. And when it does turn over, whether it's here, or even at the 141.36, which I doubt, but anything is possible, obviously, right? Then I do expect when it does come back down to test this bottom trend line here that we have a breakdown, and that to me longer term looks a little bit more probable. If you take the high of this day here and you just draw a line straight across, that's pretty much what it went into. It kind of pierced it a little bit and it pulled back. So even if you did play the double top strategy pattern for the candle charts, this 137.74 level did actually hold up a lot better than a double top would have, and you probably would have made a little bit more money off of that than if you had waited for the 137.74 level. So in any case, basically we got low volume, we got another nice up move. I wouldn't doubt that we could continue higher if we have lower volume, and if the volume starts increasing, then I do expect maybe a turnover. I don't know if it's going to be a turnover or a consolidation period before we go higher, okay, or if it's just going to be a turnover straight down. I don't see right now the charts telling me that could happen, simply because the volume isn't high. Like this volume over here, it's not really telling me that there's exhaustion, or volume exhaustion of that sort. I mean, if you look at these two candles up here, this green candle and this red candle, they both had substantially higher volume, which indicated exhaustion, and then that's why the market's turned over, creating the second point of this bottom trend line here. So that's normally what I wait for. It doesn't mean that it can't turn over now. All it means is that I normally wait for, like you guys all know the way I trade. Even though the candle pattern shows a reversal, without that volume there, I cannot validate it, simply because even though I could still turn over due to a candle pattern. I mean, simply like this, we didn't have volume here. I mean, we actually had really low volume, and then this, we had a higher volume on the doji candle. I mean, this was definitely here what you call a harami pattern. Okay, that's a Japanese pattern. I think that stands for pregnant lady. And then the market's pulled back and it turned over, right? So it doesn't mean that you need to have volume. All I'm saying is that, in my opinion, the way I trade is without the volume, it decreases the chance. And I want to put the odds in my favor as much as possible. Okay, I am still in current shorts right now. I haven't sold my shorts simply because I do think the markets are going to turn over shortly. We're at 137, 137.37. I mean, it's only $1 more before we get into the 138 level. So there's a possibility that we could actually tag this line. If we have another day like today, we could tag this line here tomorrow. If that happens, then I'm probably going to either buy some SDS long, which is SDS long is short the SPY, but it's a 2-time short, or I might just actually just short the SPY. But I already do have shorts in play, so it really depends on the situation. However, if it looks like we're going to get into this 141.36 level, which I doubt, but if it does look like it's going to do that, because you just never know with Uncle Ben coming out with all this QE3 hints, then I'm definitely going to short at 141.36. There's no questions asked. I mean, that's being that we go straight up there. I mean, if we go straight up into this level, we can right before we hit it, we consolidate. Then yeah, the 141.36 is off the table. But as it is now, I mean, this 141.36 level, I really don't think it's going to get there. But it's really not what I think. It's what the charts are telling me. And right now the charts are telling me that if we get low volume tomorrow, then we have the potential of going all the way up here. If we have a little bit higher volume, then this 137.74 level may actually hold. So the only bad part about this chart, which is what I'm looking at today, and these mathematically calculated levels, mind you, nobody else has these. It's something that I invented myself. So if you're watching this video, you'll see how these levels work if you've been following my videos. There's no name for it. It's just something that I came up with. And basically, if we had closed above this 137.74 level, then I would say, yeah, we probably would hit this upper trend line here tomorrow or Friday. But because we didn't close above it, but we did close above these two, which tells me it's a substantial, it's a pretty solid close above. That gives me in a somewhat of a neutral position. But regardless, I'm already short in certain stocks. So even if it turns over tomorrow, it's only going to go into my favor. And if it continues higher tomorrow, then I take another short right at the 138 level. And from now on, I'm just going to keep adding to my shorts. Again, I'm never going to go into big positions, just small positions here and there, and start accumulating some shorts. And eventually, the markets are going to turn over. And in my opinion, the longer term is still this bearish flag pattern. Okay. This is the weekly chart of the SPY, and same thing, you have this down move over here. You still have this bearish flag pattern. We have this 141.36 on the weekly chart. Doesn't look like it's that far away. It could easily get there. But if we get up here, which is around the 138 level, then this bear flag may actually start playing out and then start coming down. Again, nothing is absolutely 100%, especially in the stock markets. I mean, you'll get burned left and right if you think it's 100%. That's why when I enter, I don't enter into big positions, because if I'm wrong, then I don't get hurt. Not a big deal. I move on to the next. Okay. We are coming into the ending of the week. Tomorrow's Thursday. The next day is Friday. So, we're just going to have to see how it plays out. Normally, if we have two consecutive up days, then we have down days the following days. However, I have seen weeks where we've had all 5 days being down days. And I have seen weeks where during options expirations where, stocks are just positive. But I'm gonna show you some stocks, not to necessarily trade on, but just to show you what I'm thinking, that why I think the markets are also going to turn over also, in addition to that bear flag that we just looked at on the weekly, there's additional signals that tell me that there is a potential that we may continue lower eventually, or not eventually, but soon we may flip over. And again, I just want to stress that nothing's 100%, and it's just something that the charts are telling me, and something that I look at whenever I'm making a determination of which direction the market's going to go. Okay, so this is the weekly chart of the US dollar. Let me switch to the daily. This is definitely the UUP chart. Let me load my drawings here, and then there we have this 2288. This 2280 level. As you can see, and just in like yesterday's video, this 2280 level still has not been tagged yet. Okay, so it's cutting close. The low of this candle here is 2290. 2282. Wait a minute. So the low of this candle is 2282. Well, I'm sorry. This 2280, so we're about 2 cents off. Okay, so 2 cents more. We are going to have some support here because the 20 moving average is right under this 2280 mathematically calculated level. So even though this calculated level doesn't hold, we still have this 20 moving average right under it, and right before that, right under that, we have this 50 moving average, but it has to get through this bottom trend line first. So we're going to come into a lot of support on the dollar, and again, the dollar is opposite of the market, so dollar up, market down, and vice versa. So this is very close. Like I said in yesterday's video, the reason why I thought that today we may have a potential of continuing higher is simply because we haven't hit these support levels just yet on the dollar, and until we hit these support levels on the dollar, I can't expect the dollar to have a bounce. And if the dollar gets a bounce, then obviously the markets are going to pull back. So that's something we need to keep an eye on. So this tells me that the markets could turn over at any time, because the dollar could just jump right into these levels here and then get a nice pop, or break down, and then we'll have continued upside. But regardless, it hasn't hit these levels yet. It hasn't hit the calculated level. It hasn't hit the 20 moving average. It hasn't hit this bottom trend line, and it definitely hasn't hit this 50 moving average. So it has not come into support yet. It's very close, and I've seen stocks and ETFs come close before getting a bounce. So that's why I'm saying at any time there's a possibility that the markets could start turning over. This is a chart of the DX. This is the US dollar futures. Okay, so this is basically what I'm looking at here. We had this again, this what do you call double top level here that never confirmed, and we have this also this level here at 85.23. I know this is a repeat of all my videos, but in case you're here and you've never seen my videos before, I just want to make it clear, and hopefully you understand a little bit more if I have a little bit more detail here. But in any case, we do still have this level over here, and we have this 20 moving average right under it. So even the DX has not come into support just yet, but as soon as it comes into support, there is a possibility we can get a bounce in the US dollar. And if we do get a bounce in the US dollar on the 20 moving average in the US dollar futures, then we should see a pullback in the markets. Now if we break down from this 20 moving average, right below that is obviously the 50 moving average, in which case we could get another pop. So I can draw a trend line over here, and then that's where this here actually would be very beautiful support in my opinion, because we have this trend line and this 50 moving average giving me double the level here. There's no mathematically calculated level here, but this is two definite trend line and 50 moving average. Everybody knows about this. When you have two in one place, that gives it a little bit more power to it, right? But we also have this pivot top and this 20 moving average that it has to get through before it can get here. So that's just something to keep an eye on. That's why I am being patient on the SPY and picking up some shorts here and there, just to see if the markets are going to turn over. But again, I'm not going to go all in, never will. And that's how you manage your money a little bit better, because this is all pure speculation. All I'm doing is reading charts to read what the general population of traders' emotions are currently today. We had a lot of earnings out today, and then there was a lot of, I wouldn't say very good earnings, but yet you would have a lot of big pops in things like IBM, I think it was, and you just never know, especially on earnings. It really doesn't matter how good the company is. It's what the general population of traders think the company is. It's not really how good you think the company is. It's how good everybody else thinks the company is, and that's how you can make money in the stock market. Okay. So some things I look at when I look to determine when the markets may have a possibility of turning over is things like market leaders. So the Apple is the biggest stock in the S&P 500. Everybody knows that. It is also the leader of the technical sector, or the tech sector. And right now, Apple is only up at 68 cents. I'm sorry, it was down 68 cents today. So Apple is definitely showing some relative weakness already in a market that was up $1.01, which is actually pretty strong for the SPY, because its average is, it was up in average, and yesterday too. It wasn't even up that much yesterday, so it's definitely in relative weakness. And this is the leader for the tech sector. It doesn't mean that we couldn't get a bounce tomorrow based off the tech earnings that we had after hours today. But as of today and as of yesterday, Apple is in relative weakness, and it is the leader and the strongest stock in SPY. So that's something to keep an eye on. Okay. Another reason why, or another stock that I look at when I'm in an indecision type basis, is the JPM. JPM, as we all know, is the leader for the finance sector. Okay, so I haven't done an analysis on JPM in a long time, but if you just look, based on what it traded today, was negative 3 cents. I mean, seriously. And then the day before, it was also down, and the day before, it was also down. So, in a market that is as strong as it is today, is it really that strong based on the volume that the SPY was on? Didn't have much volume, so you already know that's institutional game playing. You already know it's a bull trap. But in addition to that, you see things like JPM in relative weakness to the market, and this is the leader. JPM is the leader for the finance sector, so that kind of gives you a hint that maybe it's not as good as everybody thinks it is. I believe Bank of America had earnings today. Was that after hour or before hours? Let me see here. Anyway, Bank of America also took a big hit, okay, in a positive market. But, I really can't count BAC simply because of earnings. So let's move on here. All right, one thing I like to look at is the VIX. I haven't done some drawings here. Oh, look at that. Interesting. Very interesting. I haven't, unfortunately, sometimes I miss things like this, but I guess obviously I had the VIX in my previous videos, because these drawings were here from this day, which was June 29th. I drew this $15.77 level. You can tell by I normally draw my drawings at the candle that I actually do the calculation on. In any case, this is the mathematically calculated level, which is at $15.77. We came down. The low today was $15.69, which was about 8 cents off, and then we got a little bit of a pop after that, and we're also into a double bottom over here. We also have this this trend line here. A lot of people don't like drawing trend lines the way I do, but they seem to work out, so that's why I use them. So we may have a little bit more to go, so we may possibly have a little bit more upside in the market tomorrow before we get a bounce in the VIX. And then the VIX is obviously the fear indicator, or the fear index, and when there's fear in the market, then the VIX will represent how much fear we have. Right now we have absolutely no fear in the market. We're below $17. We're at $16.16. I mean, I mean, this is the low of the VIX over here, all the way down to $13. So there's the fear is just not in the markets right now, and once we get that fear back in, then the market should be starting to sell off. Okay. So, something to watch out for is the VIX. What might happen tomorrow, and I'm not sure. It's really not what the charts are telling me. It's just my opinion. We may actually gap up tomorrow. That's a possibility because of all the earnings today, and then probably sell off. I mean, that's just my opinion. Tomorrow's Thursday, is towards the end of the week. So at any time now, so from Thursday through, I guess, next week Monday, so 3 more days. Within the 3 days, my guess is that the markets are going to start turning over, and that's just my opinion. How much higher it goes before it turns over, that remains to be seen, and that's why I wouldn't go short the market just yet, because you want to catch it at the top, or at least as close to the top as possible. Okay, and then so you just gotta watch out for those head fakes. Today's options expiration, we're gonna have a lot of volatility, even though in low volume you can see how much volatility we get in the intraday. So it is still a volatile market as of now until Friday. We're going to see that volatility, and Monday is obviously going to Friday and Monday are obviously even lower volume, because that's just the reputation. So there is still a possibility of more upside in those days. But you know what? All these, like the dollar and the VIX and everything, is coming into some major support, very close to it. So we should see a reversal on those, which is a inverse to the markets. In which case, the market should be turning over, in my opinion, shortly. Okay, so for those levels to get hit, the 138 on the SPY, or even the 141, I don't think we'll be able to get there until we get a pullback first. But again, you just never know. It's what I think. It's not what the charts are telling me. I'm telling you in these videos what the charts are saying. But then of course, I'll give you my opinion on both what the charts are saying and what I think is going to happen. So that is your 7-minute market update. I just wanted to say thank you very, very much for stopping by to see these videos. I mean, yeah, I only have, like, I don't know, 10, 15 subscribers. Maybe only half of those of you actually watch these videos, but I do appreciate you guys taking the time out of your day, and I know you have a busy day to watch these videos. So I hope to see you in the next video. God bless to you all, and good luck in your